This is Scott Becker with the Becker Private Equity and Business Podcast. I'm thrilled today to be joined by Holly Buckley. Holly's the leader of the national healthcare practice at McGuireWoods. She also lives at the very intersection of healthcare and private equity, and also still does some work for large health systems. So she's got this incredible vantage point. I thought we'd talk to Holly about two different subjects today. First, the subject of what areas in private equity, particularly in healthcare private equity, where there's still a lot of action as we start to see deals heat up again. Where is some of the areas, the niches that we're seeing more activity? And then second, Holly's been in charge of the healthcare department, the national department, which is one of the most highly ranked departments in the nation for a few years now. And just a few lessons on leadership that you could share with us from having taken over that group and led it so well. Holly, let me tee you up and ask you, where are we seeing activity in the healthcare private equity environment? What's interesting?
Yeah, so I think maybe before I talk about what we're seeing now, it's to rewind kind of the last few years and what we were seeing a lot of, because we're seeing less of that now. And so a few years ago, it was just crazy amounts of physician practice management, direct provider businesses. Multiples were really high, just a huge amount of transaction volume in that space. And in the last 12 months, we've seen a real pullback from that. And so we're still seeing some deals on the direct provider side. We're seeing still add-on transactions for the platforms that have already traded. And we're also seeing provider side deals with kind of really nice, high quality assets. So folks who are still coming to market, notwithstanding the tough deal environment, where there's just a really nice, high quality asset to be sold. So we're still seeing some volume, but just way less than we were seeing a couple of years ago. But then in addition, we're seeing some other areas that we were seeing a lot less of a few years ago. And I think of these areas as being almost everything around provider businesses. So healthcare IT solutions that support healthcare provider businesses. We're seeing businesses that maybe are provider light, so whether it's veterinary or med spa, but not direct government reimbursement. We're seeing pharma services businesses trading, just things that are not in the direct healthcare provider, government and commercial reimbursement kind of bullseye. And then we're seeing some other areas that I'd say are ramping up, but we're not seeing a huge deal volume yet, but a lot of interest. And that's things like the GLP-1 weight loss drugs and other areas that, you know, are going to probably be transacting more in the next few years, but are still pretty premature.
Thank you very, very much. And anything that's particularly, I know there's been all this discussion about how many vet deals are getting done. Anything else in the healthcare sector that you're seeing more action in than others? I mean, obviously, we're not seeing a lot of the bolt-on practice deals as bolt-on practice margins get tighter and leverage makes that challenging. But anything besides vet that particularly comes to mind where you're seeing some activity?
Yeah, I mean, med spa is another one I mentioned that we're seeing a lot of interest in a lot of businesses where folks are trying to pull them together. It's a highly fragmented market, a lot of interest both in the med spa provider space, but also in the ancillary space, things like med spa lasers, cosmetics, nutraceuticals, and things like that. So that's definitely an area we're seeing a lot. In the provider space, we're seeing a lot of focus on how to optimize those businesses without necessarily just doing add-on deals. So whether it's adding on ancillaries such as ambulatory surgery centers, even kind of weight loss ancillary service lines such as pharmaceuticals or imaging, ways to really optimize the assets that have already been acquired. We're seeing a lot of businesses pop up in that space that are trying to sell into private equity-backed businesses, and the private equity-backed provider businesses are looking at those and trying to figure out what makes sense, what's viable, and what's not.
Thank you. And take a moment on leadership, Holly. A few years ago, you took over as the chair of the National Healthcare Department, large department. What are you seeing? What are you seeing, and what lessons have you learned in the first few years of leadership? I mean, you've always been a leader, but in actually running the department, a couple lessons you've learned.
Yeah, and I actually think that yesterday was my 3-year anniversary as department chair, which is crazy. It's gone incredibly fast. I think the biggest lessons are probably the most obvious as well. Really, I'd say the two things are, number one, just the importance of communicating with people and communicating directly with people. I've always struggled a little with the fact that people tell me I'm really direct and intimidating, which I think is crazy because I don't think I'm direct and intimidating. Just kidding. I know I'm direct. I like to think I'm not that intimidating, but I would try for a long time to be more indirect with folks, so that I didn't intimidate, and maybe send messages to other people to try and kind of to soften things so that people were less fearful if fear is in fact the right word. And I found that really just kind of setting that aside and making sure I am just very direct with people and talking very straight with them is just a much better pathway, and then no one's ever surprised. And that really goes to the second point, which is another very obvious one, which is around expectations. People are rarely upset or disappointed if the world happens around them consistent with what they expect. People are generally much more upset when they're surprised by things. And so I try to make sure that folks know where they're at each stage along the way, whether it's on elevation or practice development or whatever it may be. Just trying to be very communicative in terms of how people are matching up with my expectations and with the firm's expectations, and with, frankly, the expectations they've set for themselves, so that there's never any mystery around that. So the two really go hand in hand, but it's communicating directly and making sure that people's expectations are consistent with reality.
Thank you. I think there's so much to be said for your comments on sort of, as you find yourself in leadership, not trying to compromise your authentic way of doing things and your authentic self to try and fit a certain leadership mold. But I think this concept of being direct, of constant communication, is a real plus. And I think it's shown as you found your sort of leadership stride, getting comfortable that those traits that got you here are some of the same traits for your own self that lead you to be a great leader, and not trying to leave those at the door. So I think that authenticity and effort is really a great perspective. Holly, there's a report this past week that $30 billion in private equity deals were announced. There's also a great PwC 5 takeaways, or sort of their mid-year outlook on private equity, and in different senses of whether the deal environment, obviously the deal environment's much slower than 2021, but a little bit better than 22 and 23. Are there signs at all of acceleration there, or still sort of this misdirection between valuations between buyers and sellers? Even though I saw the stats in the PwC report that ultimately 27,000 sponsored companies in some way or another are seeking exits.
Yeah, I mean, that's the $1 million question, Scott. I think things are improving, albeit slowly. I don't think we're going to have a gangbusters second half of the year at all. I think it's going to continue this kind of steady plod to the end of the year. I think there's an acknowledgement that interest rates, when they do move, are going to move very slowly, and they're not immediately moving. This is going to be the deal climate for quite some time. There's been so much capital to be deployed for so long, but we're just not seeing the accelerator that we thought we were going to see 6 months ago and 12 months ago. Each quarter and each half of the year continues much the same. And so I don't think we're going to rapidly increase through the back half of the year. I think it's going to be much more of the same, with hopefully some incremental progress.
And I think it's fascinating because as private equity funds keep on raising money, the LPs are getting a little bit impatient for distributions on funds they're already invested in. At the same time,
Correct.
Private equity funds don't want to return subpar distributions for fear of, not having that contagion of people continue to sign in and sign up for the next funds. So you got this really interesting situation where private equity funds are still waiting to see if they get the right valuations so they can return the right amount of capital to their LPs to keep their LPs happy. It's really a fascinating situation.
That's right. That's right. But I mean, in the healthcare space, we at least know there's still a huge amount of work to be done to really modernize and automate the healthcare system in the way it needs to be improved. There's a lot of work to be done. And so I do think investment and improvement will happen. It's just a matter of the climate and the pressures coinciding to get some more deals done.
Thank you very, very much. Holly, always great to visit with you. Always learn a great deal. Thank you for joining us today on the Becker Private Equity and Business Podcast. Thank you very, very much.